I was recently asked an interesting question by a homeowner I ran into, and he asked me how much capital gains would he have to pay if he sold his home. And this was his primary residence, and I kind of looked at him a little bit dumbfounded because there is no capital gains on primary residence. And I realized there might be some misinformation and disinformation surrounding capital gains and how it all works. So I just want to iron out a few key points for you guys, and hopefully you learn something from this video. A simplistic explanation of what a capital gain is, it's the increase in value of an investment or asset at the point that it's sold. So if you buy an investment or an asset for $100 and you sell it for $200, your capital gain is $100. In real estate, an investment is a rental property, a cottage, commercial real estate, or a business. However, it does not apply to your primary residence, but there are rules around what is defined as primary residence, and that's something you want to speak to a real estate lawyer about or a financial advisor. Now, the government of Canada has recently announced some changes to the capital gain rules, going from 50% to 67%. However, you're not paying 50% tax and 67% tax. Rather that it's 50% of the capital gain goes towards your taxable income and 67% of your capital gain goes towards your taxable income. Now you might be thinking to yourself, 50%, 67%, which one is it? Well, it could be both depending on the amount of your capital gain. So let's look at a quick example so you guys have a better idea of how this works. So let's say you sold one of your investment properties or secondary houses, commercial buildings, and after all the calculations, your total capital gain is $385,000. 50% of the first $250,000 will go towards your total annual income, so in this case $125,000. The remaining $135,000, 67% of that will go towards your total annual income, so in this case $90,000. So now you're adding $90,000 plus $125,000, you have $215,000. Now let's say you make another $75,000 at your job, and then you pulled out some money from a stock or an investment. Now your total annual income is in the hundreds of thousands of dollars. You're in a whole new tax bracket, and then the government just takes all your money. Joking? Kind of. So that was a very simplistic and brief explanation about how capital gains works, at least in the real estate world. There's so much more to this stuff, guys, so you always want to consult with a real estate lawyer or a financial advisor. I'm neither one of those two things. I just wanted to talk about those two key points, is the capital gains does not apply to your primary residence, and I just wanted to go over the calculation from 50% to 67%. So hopefully you found this video helpful. Maybe you learned something about capital gains today that you didn't know before, and as always, subscribe to this channel so you don't miss out on any future videos.